If you're currently using DSCR loans to build your portfolio or you're planning to, you need to watch this video before you do anything else because the rules changed in 2026. And if you're still operating off of last year's playbook, you're going to get blindsided. Now I'm going to break down exactly what shifted, who it hurts, who it doesn't, and more importantly, what you should be doing right now. And I kid you not, some of this is going to change how you're looking at your next deal. My name is Stef, and I've worked with real estate investors every day to get them the financing that they need to close their next deal. And DSCR loans are something we do constantly. Now, this is not hypothetical issues. This is going to be something real that I'm actually going to show you based on deals that we're doing today, right now. Now, you already know why DSCR blew up over the last few years. But 2026 changed some things, and a lot of investors don't know that yet. So I'm going to dive in A to Z on all the changes you should know about as an investor if you want to buy more properties and scale your portfolio. Now, for the first change, we need to understand basic DSCR math. I'm not saying that this is how you should look at from an investor standpoint, right? If it's a good deal for you, I'm just saying from a lender perspective, this is how we view the property, right? So you have DSCR, which equals gross rental income divided by the proposed PITIA. It just basically means the mortgage payment with escrows, okay? So with this situation, we look at, okay, is it tenant occupied? If it's tenant occupied, we use the lower of either the executed lease or the Form 1007 market rent. When the appraiser goes out to the property, he's going to assess what is the market value of this property, meaning how much can you rent it out for, right? Now, if it's vacant, that's a different story. You use then only the market rent. There's no haircut required, by the way, they call it the investor advantage. That's just a DSCR program. But basically, they don't take anything off the rental income. They just use the gross rental income, which is really nice. If it's a month-to-month lease or if they pay cash, right, there's been some changes around this. And this is something that we have to talk about beforehand because we want to at least get the story straight when we submit this to the underwriter. So month-to-month lease is permitted. It doesn't need to be a fixed term lease. If you have a short-term rental like Airbnb right now, 12-month average of actual income is preferred, or you can use AirDNA. If the property is vacant, we can also just use AirDNA or use the appraiser's assessment as well, okay? So it's very effective right now for using that. It's important to understand the math. We just want to make sure that the gross rental income covers the mortgage payment. That's what the lenders care about for underwriting purposes. The next thing is if you have a mortgage payment that is too high, right? And what do? Well, one of the things we do is go to interest-only loans. So there are interest-only DSCR loans, right? It's a super, super effective hack. Interest-only loans greater than 5 years, right? DSCR is calculated on interest-only payments, right? Lower denominator equals higher DSCR, right? If the interest-only loan is less than 5 years, then the DSCR is calculated on amortized PNI. It's less favorable for those borderline deals. So if the deal is right there, you can structure a 5+ year interest-only loan to significantly improve the DSCR calculation and get the deal done. We do this all the time. The next change is gift funds. So believe it or not, gift funds usually are not allowed for investment properties, but we have a DSCR program. We have an investor that allows for gift funds to be used for the down payment on you purchasing. So if you're purchasing a property using a DSCR loan, you can use gift funds, and they're listed right here. For LTV, right, 80% or more, you have minimum 5% from gift funds allowed. If you're doing 30% down, 70% LTV, minimum 10% from gift funds is allowed. Basically, there is a rule on how much gift funds you can use as listed there. You can't use gift funds to cover the entire down payment, right? But it is very effective to not have to use your full capital. The next thing is LLC and entity vesting. Now, necessarily, this isn't something new. You can always close DSCR loans in an LLC and not report to personal credit, at least in the beginning. But after the loan gets sold, sometimes it still does. But we allow for corporations now. So we're seeing this where corporations like S Corp, C Corp, you can close in those entities instead of an LLC, like a sole proprietorship LLC. So very useful there. The next thing is cross-collateral blanket loans. You can scale to 25 properties in one loan. I talked to a guy that knows a seller that's selling right now 13 properties in Texas. The seller owns 13 single-family homes, and he's done. Doesn't want to give it to his kids or his estate, like to his inheritance. He wants to sell it, take the cash, and be done with it, right? And so we have a client that we're going to use what's called basically like a blanket DSCR loan to buy multiple properties at the same time. So some of you may not be at this point in your portfolio, I should say, and that's fine, but it's something to keep in your back pocket. Imagine one mortgage payment instead of 13 mortgage payments. It's beautiful for accounting and for like just keeping track of your rentals and keeping track of your expenses. So property type is available for 1 to 4 units, right? Maximum is 25, minimum is 2, typically depending on how much on what the loan amount is. They do want a higher loan amount, so it has to be minimum 400,000, and I mean total. Like other DSCR programs, has to be 1-to-1, experienced investors only, so you have to have owned properties already, and they do not allow foreign nationals, people that aren't citizens, right? So you have to be a citizen. So you can bundle properties together, fewer closings, one payment, one set of closing costs. It is absolutely dynamite right now if you are in that situation. Next change is short-term rental properties, okay? So for investors that have STRs, right, Airbnbs, VRBOs, DSCR is calculated on a 12-month average. I mentioned this earlier. Rent loss coverage not required now. Max loan amount to $2 million. There's no market rent cap applied. The actual STR income drives the number, which is super useful if you have a strong Airbnb. And for refinances only, this is not for purchase transactions, right? Of course, if you're buying a property, we don't have rental income history yet, so it's different what they ask for. So if the next change is if you are a first-time investor, here's what you got to know. DSCR programs do not allow first-time homebuyers usually. Typically, they want you to own a primary residence. They want you to have some housing history, but I have great news. You can actually still use a DSCR loan if you've never bought real estate before. Now, there's less programs available, but luckily for you, we have some. You just have to show, mainly one of the biggest things is that you have some sort of housing payment. If you are paying rent, you have to show that you've been paying rent the last 12 months. Typically, that's what they require. And you have to show that you've been paying your other bills on time, at least 2 to 3 other bills, along with your 12 months history of rent. So that is very important for these underwriters. They want to know that you are a good borrower that can pay things on time for their housing. The next changes is seasoning and no limit on finance properties, right? So minimum seasoning since a housing event, meaning when's the last time you had a foreclosure or a short sale? I know not everybody has this. If you had a foreclosure or a short sale 2+ years ago, you can get back in the game with DSCR. No documentation required for income. You just got to have a clean payment history since the event of the foreclosure or the short sale. There's no limit now on number of finance properties. Unlike conventional loans, which cap people at 10 finance properties, our DSCR program has no cap. So it allows serious investors to really scale indefinitely. And that's honestly true. Like, I love using that word indefinitely with this, because in what world in real estate can you use things and have unlimited use? But that's what this is. It's literally like unlimited financing. So it's extremely useful for those situations. One thing I'm going to say too is for seasoning as well, like how long you've owned the property. You can now use a DSCR cash out refinance or no appraisal HELOC, or depending on the program, within 0 to 6 months. Sometimes you need 3 months seasoning. Sometimes you can do it as fast as 1 month. Just depends. The last change, guys, that's super important for you. If you're still with me on this video, congratulations. You're already getting ahead of so many investors just by knowing these programs. But the next thing is the reserve strategy. So typically they require 6 months of the mortgage payment in reserves. So if the mortgage payment is, let's say, $4,000 a month, you need 24 grand sitting somewhere. It doesn't have to be checking savings. It could be 401k. It could be Roth IRA. It could be stocks. It could be crypto, right? So it's got to be somewhere. And then eligible liquid assets, retirement accounts, as I mentioned, investment portfolios, they usually qualify. Now, as a bonus, I'm going to give you guys a tip. If the DSCR ratio is too low, try these fixes, okay? You can switch to interest only, like we talked about. You can work with the appraiser to document highest comparable rents. If the property is not vacant, let's say you do have a tenant in there and the appraisal value the rent comes in lower, like his opinion of the rent. If we show that you've received 2 months of rent from that tenant, we can use the higher rents. So that is a good program or a good example of when we need to use higher rents to get the loan to work. If you have STR income, it's not reflected in market rent, right? We could use actual income history. If you have multiple properties, some below 1.0 DSCR, consider a blanket or cross collateral. Property minimum is only 0.75 per property for blanket DSCR loans. If property needs lease to boost the DSCR, you can use a month-to-month lease, right? It is permitted, or you can talk to us and we can kind of figure out what's the best lease structure to make sure that the loan works and qualifies. Listen, if you need help, you can sit here and guess for hours, you can research for hours, or just book a quick call with me. I'm just going to tell you, like, this is what we need to do, right? So you can book a call, email me. My email is right there on the video, and my website, and my link is going to be in the description below. Listen, hope this was helpful. If you have any other questions, just reach out. Thanks.